presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one.
Okay.
Appreciate it, man.
Now, Tom O'Brien.
What's going on, folks? This is Jacob filling in for Tom O'Brien. Let's take a look at what we got going on today. All right, so ES Mini, we're up about 0.47%. The Russell is burning a little bit at 1.22%. The NQ's up 0.97%. The Dow Futures down a little bit. Of course, the NQs are doing pretty well, and we'll talk a little bit about everything going on with tech looking forward here. Let's take a look at gold. We broke down here. All right, so we're trading at the 2050 level, currently at 2038.70. Again, this is really just in this kind of sideways moving pattern here. And we're seeing also, I think probably on a long term, so with the larger market, until we get some pretty poppin' news. Everything that went on with AI today could be a good excuse for the market just to really continue to rip higher, make these all-time highs. All right, let's take a look at silver down, not really anything today, trading at 22.63. Copper continues to move down on that contract, trading at 368. Of course, we were eyeing almost 4 and looking at a 404 price target for copper. Of course, nothing is linear, so we'll see kind of how this responds in the days ahead. Okay, crude oil also going up as well, but 76.57. I think there's some talk too that there's going to be even larger winter storms. I guess the rodent that they have up in Pennsylvania wasn't right about spring. I don't know. Anyways, crude oil is trading up 76.55 right now. I think energy costs are probably going to go up for a little time going forward. Let's take a look. Tesla rebounding a little bit, up at 192, almost back to that 200 area. Of course, we gapped down around this level on January 24th, and then gapped down here on January 25th on some quite significant volume. And we'll see if we can get back up there. Some issues going forward for Tesla, even with local competition, which we'll talk a little bit about when we come back from the main break. Steel Dynamics trading 124.35. Something interesting to note about them. Okay, this is some pretty late volume too. This movement upwards, right? You've also had some of the execs selling some of their shares over the past 6 months with no buybacks. And that doesn't mean anything, right? I mean, they could just be cashing out and, they like this price point and whatever. There's plenty of reasons why, but it is something interesting to note, I guess. I had read a little bit about that yesterday. DXY, we're still in the 104 area. Of course, coming back down a little bit from that 104.64 level, 104.60, and just really hovering for the past 3 days here at the 104 level. Q's ripping at 437.10. Google, even more so, they rebranded their personal AI, which was Bard. It's now Gemini. Gemini is the suite of tools that they use, and I guess they wanted to rename it rename it from Bard to Gemini. So anyways, they're up today. We'll talk some more about them as well. Meta, 469. Disney back down a little bit from that 112 high that we've seen, and that's, you see from the, come on, this is pretty nice. Well, obviously it's year to date. We're in February. We haven't seen these levels in quite a while. So it's pretty nice. And that was on significant volume as well. You have Apple trading at 188.77. And then the SPY, of course, we're up above that 500 level at 501.09. All right, cool. So what's going on today? Well, you had PepsiCo come out with earnings. Nobody liked them. Let me see real quick on the ticker for it. Pretty self-evident. Pep. So we're down about 3% today. So what is going on with PepsiCo? On Friday, they reported mixed quarterly results as North American demand for its food and drinks weakened. The CEO said that the U.S. sales broadly slowed down in the fourth quarter. Part of that slowdown is due to pricing, disposable income situations. He told investors on the company's conference call. He added that U.S. consumers are also shifting their behavior from eating and drinking at home to picking up more of their snacks and Gatorade from convenience stores. But LaGuardia expressed optimism about the overall state of the consumer, citing low unemployment and hopes that interest rates will fall by the summer and wages will rise faster than inflation. Of course, fell 3%. The earnings per share on that was $178 adjusted versus the $172 expected. Revenue was $27.85 versus $284 billion. Pepsi reported fourth quarter income that was net of $1.3 billion, up from $518. Of course, I feel like Pepsi is pretty dominant in some of the food away from home areas. Like it's kind of, I don't know. It's for me, I don't see Coke as much if I go. I don't drink soda, but I definitely, see what they have on the menu and everything like that. And at least in some of your, let's say Chipotle or something like that, they're running brands like Pepsi. So interesting to see kind of if they can really even make a big comeback against some of the bigger brands. Let's talk about, what really the big news is too. And this is NVIDIA, this is ARM, this is the future of chips entirely. Okay, NVIDIA, I was talking to Tommy earlier and I hadn't even seen it ramp up like this. This is in the past few days, Up at 718 right now, up 3.18%. I would talk a little bit about NVIDIA. This is what I like about this stock. Okay, yeah, they're valued extremely high, right? But this is a large behemoth of a company that is continuing to innovate, right? This isn't like they're in some kind of cash cow phase where they have a product that people like and it's just, inside of the culture. They're constantly adapting. Their GPUs are getting better. They're coming up with different kinds of products for whether you're using home GPUs, whether you're doing, AI learning. I think they're starting to develop TPUs, which are tensor processing units. It's huge with Google. I'll check on that on the break regarding NVIDIA and TPUs, but these are going to be introduced into the basically general AI education. And then DPUs, which are massive, right? We'll talk kind of how that all works and why it matters and what these things do. But NVIDIA is continuing to make themselves competitive, even though they're sitting at this pretty high stock price, which is nice to see. And of course, too, I think they probably have to kind of meet up with the expectations that investors obviously have at a price point of 718 shares. Of course, we're about to go to the break, but you had big stories, obviously, with Sam Altman coming out and saying he wants $7 trillion to kind of plan out a massive infrastructure for AI. And we'll talk a little about that when we get back. Stay right there.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, welcome back, folks. For some clarity's sake, it's just Google making the TPUs, which are the tensor processing units, and these are designed for their neural networks specifically, and that seems to probably be, I would assume, probably an issue if companies want to, adapt their own neural network, right? That's probably why GPUs will remain pretty strong going forward. Anyways, the point I was really trying to say is that NVIDIA is still doing a lot of different things. So let's take a look over here. So exclusive NVIDIA pursues $30 billion custom chip opportunity with new unit sources. This is pretty unique. NVIDIA is building a new business unit focused on designing bespoke chips for cloud computing firms and others, including advanced artificial intelligence processors. This was multiple sources. The dominant global designer and supplier of AI chips aims to capture a portion of the exploding market for custom AI chips and shield itself from the growing number of companies pursuing alternatives to its products. The company controls about 80% of high-end AI chip market, a position that has sent its stock market value up 40% so far this year to $1.73 trillion after it more than tripled in 2023. Furthermore, ripping out these DPUs as well, these things are going to be really important for these basically massive network centers that we already have and the ones that are going to come. Its H100 and A100 chips serve as a generalized all-purpose AI processor for many of these major customers, but the tech companies have started to develop their own internal chips for specific needs. It's just super interesting how that works. Of course, those will be far more expensive as well. But it's cool. Like I said, I like the company for that reason. I think they're forward-looking in a lot of ways. Furthermore, I think we have the Biden administration. He's doing $5 billion commitment for research development of computer chips, which will be massive. Be interesting to see where that goes to as well. All right, a little bit on what I was talking about the other day, which is some of these cybersecurity companies. Fortinet, they're up today, 4.29%. They actually had a major vulnerability discovered in some of their OS. Okay, this was on their 40 OS. Really, the major problem was coming from something called a Fortis seam, and a seam basically is what's watching the network, okay? And that there was a command that was being sent from that essentially was vulnerable for it. But they were able to kind of resolve that pretty quickly, and people still tend to love it. And this is the interesting thing too. You see some of these like major vulnerabilities, they get patched relatively quickly. This is one that Fortinet found themselves, which is a positive for the company. And I think you like see that a lot. Like no matter what happens with a lot of these breaches, you don't see much of an impact against the companies that experience them. I still think that a lot of the market is turning, I think positive towards a lot of these cybersec stocks, and I think it's beautiful. You've had Cisco as well. I think they're getting rid of thousands of people, and it's like we're in this kind of like great slimming age with a lot of these tech companies where they're finding the areas that are really productive for them, and they're just getting rid of everything else. And that's obviously makes them a lot more profitable as well. I want to talk a little bit more about this Biden administration investment in chips. And I do get emails from people sometimes, like, and I really appreciate them too. It's just there's conversation around like, are these chip manufacturers overvalued, right? And we can talk about Sam Altman, Sam Altman, I think it's Sam Bankman-Fried, Sam Altman asking for $7 trillion. I was looking, and Tommy and I were talking about this too. This is from Business Insights. The semiconductor market was valued at $527 billion in 2021. And it's going to grow to about 1.4 trillion by 2030. Asking for $7 trillion from where it was, it's almost like, it's like, where does that actualize, right? And I think really what they're trying to say is that you're going to have this massive overhaul in the economy. It's going to be very rapid. I mean, you talk about like 5 years from now or something like that, such a large growth in AI and semiconductors. I mean, they're trying to tell everyone that this is the new kind of economic revolution we're going to be in. And I think that means, you're relatively okay with some of these stocks, even though you have something trading at like, $712, like NVIDIA, where you're not seeing all of that kind of materialize immediately, all that profit and everything. It says the Biden administration is announcing a $5 billion commitment for research and development of computer chips. The National Semiconductor Technology Center is being funded through the CHIPS and Science Act. That 2022 law aims to reinvigorate the computer chip sector within the United States through tens of billions of dollars in targeted government support. And that's kind of what you have to do, because this isn't just consumer level chips. I mean, this is, countries are going to establish themselves and establish a global hierarchy based on how effective their AI is, right? How good their computation is. And we've already seen it on a computational level. When we think about something computation as complex as AI, think about when you get into quantum computing and everything. I mean, that's not even something that I think any of us are kind of prepared for when that breakthrough happens. And whichever country gets ahead of this and can make their own chips and make the best chips and no one else has access to them is obviously going to be the one that's dominant on the global stage. Stakeholders in the chips industry gathered on the White House campus today to discuss how the center should prioritize research and worker training for an industry poised to expand because of government backing. Not just because of that. Seriously, the coronavirus pandemic exposed the risk to the economy and the national security overdependence. Yeah, of course. Putting anything that's a national security matter outside of the borders, I think, is weird. And of course, I know you have like absolutes and comparative advantage and everything, but some things go beyond kind of like the market value, I think. Anyways, if we can hop on this and then continue to sell kind of, last gen or, double last gen kind of tech outside of that, I think, we'll poise ourselves pretty well going forward. I think that'll also create a lot of jobs in the U.S. too, and everything is going to use tech. And I mean, think about continents like Africa, right? Now, of course, they have computers and internet and everything like that, but they're not, the whole continent isn't there yet, right? And so the growth potential for Africa is massive. If you get even a fraction of the people who live in Africa, like say, your big cities, right? Like Nairobi or places in Ethiopia and everything, if they really get on board and start developing in a serious way, they're the ones going to be consuming this as well. And I think you just kind of can get an exponential growth with things like in chip, even though it doesn't seem like it's massive now, right? So, anyways, let's take a look at Tesla right now. Where are we at? We're at 192. So let's look here. This is a pretty interesting article. It says Tesla trails Ford and GM in revenue generated per worker. Elon Musk reportedly ponders layoffs. Recent financial reports from U.S. automakers showed the leading electric vehicle manufacturer lags in the amount of revenue generated for each of its employees. Tesla reported almost $97 billion in revenue last year, equivalent to just under $690,000 for each of its 140,000 employees. We'll talk a little bit more about this when we get back from the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Yeah, we had someone in the den. He said, don't see much of the impacts of hacks yet. Rumors that Chinese hackers have been in critical infrastructure for 5+ years, maybe just not yet deployed, activated. Yeah, I mean, I had someone who's like close to me. They worked for like the DoD for a little while, and one of their things was, they would be the front kind of line if there was some kind of like ransomware attack on like a small little city or something. which happens actually kind of a lot, which is kind of weird. I mean, not a lot, but like more often than you'd probably think and more often than it's in the news. And he said to me every time, it's like, it's always going to be something from China or from Russia. I don't know if they're all in our infrastructure. We have to think, too, if they are, I mean, no doubt that we're in theirs as well, right? So you kind of have this, like, new Cold War deal happening, right, where the Russians have missiles pointed at us, we have missiles pointed at them. It's just not as apparent, right, because everything's still functioning fine. It's more of the issue is, like, we had a lot of relays that were hit last year. I think that kind of ramped up. There is evidence that they were doing things with some of our water treatment facilities, which obviously has a huge issue. The biggest problem would be something like in hospitals, and I think dumping a bunch of money into that, or, I mean, you could run it this way too, right? You could require, large companies within some certain criteria, and I don't know what that would be or, what legislators would decide, but say maybe to have some form of insurance. And in order to be insured, they have to follow some kind of standards. Now, there's NIST standards, which everyone follows. If you're handling PPI, you have to follow standards on that as well. So, there are things that exist, but it still lags behind what I think probably should be. And it would make sense that nothing like really manifests in a major way yet, because that will obviously be met with some kind of retaliation from the U.S. So I don't know. It was just I see it as something that will be invested in heavily going forward. Certainly when you get into these ideas of like intelligent networks, that control like vast and pretty important processes like that civilization functions on, you're going to see a really big increase, I think, in cybersec spending, and you're going to see it kind of transition into the military as well, maybe even before that. So, anyways. Let's move on here. What do I want to see? I'm trying to find. I love when this happens. There we go. So I wanted to talk about this a little bit. This is EPN, Fox News, Warner Bros. Teaming up to create a new sports streaming service, and I dog these new services all the time. But hey, I guess if you have multiple people in it, it's probably not as difficult. So this is ESPN, Fox Corp, and Warner Bros. Said on Tuesday that they're joining forces to launch a streaming sports service. And I think the streaming services for sports that Fox has currently has been pretty good for them. The platform will include offerings from at least 15 networks and all 4 major professional sports leagues. The paid service is scheduled to debut this fall via a new app. All those subscribers will be able to bundle it with Disney Plus, Hulu, and Max, according to Chapman. See, that's pretty solid. Each company will own a 1/3 stake in the joint venture. The plan comes amid increased competition in the business of streaming sporting events, with industry giants including Amazon and Netflix recently striking deals to add sports content for their streaming customers. In announcing the new venture, Walt Disney-owned ESPN, Fox, and Warner Bros. Said that the new platform would provide access to thousands of high-profile sporting events. Wow. With viewers' attention split between TV, cable, okay, so on and so forth. Anyways, I think that's kind of what you're going to start seeing soon. And it's so funny how we get away. It's like we took this long road just to eliminate long ad breaks in cable, right? I mean, this is just going to be the same thing as cable. You get these package deals and you get to decide. And what was cool about the streaming is you could just choose whatever you wanted and there was no ads because you paid for a service. And it's just gone back again. It's kind of funny. Everything's a flat circle. Let's talk about New York City Bank. A lot of interesting stuff going on with the commercial real estate market. You had Yellen come and said that some banks will be hit pretty significantly with it. But we can talk about New York City Bank at least. Some people are buying today, as you can probably see if I get it off the 1 year. Just a tad down from the bottom here. I mean, obviously, we had immense volume, and this bank will struggle if there's, whenever it really comes to light how rough that sector is in. We can talk a little bit about it. Troubled regional lender New York Community Bancorp attempted to reassure investors Wednesday that it has enough cash to stay afloat after the stock shed about 60% of its value over the past 8 days. The challenge today is not easy, but this company has a strong foundation, strong liquidity, and strong deposit base, which gives confidence for the path Ford. That's the new executive chairman. The bank announced earlier on Wednesday that it had appointed Danilo, formerly the president of Flagstar Bank, to the position effective immediately. Overall deposits are up from 2023 as all areas of the company have performed strongly, including our private banking and mortgage teams. We're already we're already in a strong liquidity position, and we are committed to building further liquidity. Investors weren't immediately convinced. Shares of the stock fell about 14% earlier in the day, but they're a little bit positive, and we are a little bit positive at 4.8% currently. Yeah, I still think that the issues exist for some of these smaller regional banks, and we'll see what happens. I mean, you're even seeing money getting pulled out of Europe by huge amounts per day out of that same kind of industry. So we'll see kind of what happens with it. Something with Exxon, they're pulling out of French Guinea, which is interesting. They've been trying to sell their equipment and kind of their land leases inside French New Guinea for a long time. It'll be interesting to see if they get out of it. Of course, too, you have some interesting problems going on between Venezuela and Guyana right now. Now, usually this would kind of be a cause for concern, and I wonder if this is kind of contributing to this price drop. Venezuela is basically militarizing the border with Guyana. ExxonMobil pulls a lot of oil in that area as well. The Exxon executive said that Guyana is not alone, which essentially suggesting that if Venezuela tries to do anything at all, there will be international reaction. And it's just so crazy, again, how quickly all this stuff can shift on a global scale. Even if 5 months ago or 6 months ago, wasn't much going on besides, Russia. And now we have everything in the Red Sea. We have everything with Israel. This might pop off. It's just kind of interesting to see going forward. But as it stands now, Exxon is down about 2% for the day. We have some good news for some of these online sports betting stocks, and we'll have to see. So, we've had a pretty interesting change in the culture kind of over the past few years with a lot of these states opening up sports betting, especially online, right? Now you see something coming out of Alabama that's allowing even casinos to open up, which will be huge for the economy of these places. The Alabama lawmakers cast their first votes next week on sweeping gambling legislation. We'll take a look at some of the stocks when we come back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, welcome back, folks. But 1 second. So I was texting some people in the den. Again, I haven't plugged that in too long. Check it out if you're not in there yet. I love that place. Just some news on L'Oreal. Their shares fell more than 7% Friday before slightly paring losses as the company reported lower than expected sales and pointed to a slowdown in demand in Asia. The world's largest beauty brand on Thursday reported fourth quarter sales below estimates, rising 2.8% to 10.6 billion euros. That's 11.4 billion Freedom units. Barclays analysts had anticipated a figure near 10.9 billion. The company, which owns brands such as Lancôme and Kiehl's, also logged a 7.6% increase in 2023. Quarterly shortfall was led by activity in North Asia, including China, where sales fell 6.2%. And I would be interested to see, too, like, that's, I think, kind of a risk you have on some of these larger multinational companies, especially when you get further away from, like, Western standards. And what I mean by that is, like, you know, do you have places like China, which are in, you know, they have their own national identity, but they're going through massive changes now in that country. You know, the new generation is there. People are making more money, and there's like a pretty established middle class, right? Good purchasing parity and all of that. And do they, you know, have similar things like we have in America, where we want to buy American or, you know, anything like that? You know, what I think the larger the company, the more exposure you have to that in this world where it seems like more regions are developing an identity and are able to kind of influence the global market. I mean, take a look at Sam Altman. You know, he's going to the Middle East for funding as well, right? And now you're seeing, I mean, geez, you had Abu Dhabi buy UFC, you had the Saudis getting into live with golf, major entertainments. I mean, these are now like completely different regions with completely different outlooks on how things should be run, and they're big shakers now. And I wonder if you'll see like kind of a contraction in these companies that sell products globally. Now, of course, you always have offices in those areas that are able, you know, to get a pulse on what's going on. But it's kind of interesting to think about. You know, I would love to like poll people in China and see what they think about L'Oreal versus some kind of other Chinese product, and whether or not this is kind of like a permanent contraction for L'Oreal. I don't know. It would be interesting to see, and I think that's kind of hard to say as we stand now. All right, so I haven't done this in a while. I talk sometimes about, you know, some interesting like paper release in Science or something like that. This kind of touches on that. This is actually with General Mills, and this is kind of insane. General Mills is urged to reduce plastic chemicals in food products. What? Let's take a look. Consumer Reports is urging General Mills to reduce plastic chemicals in its pre-packaged food. In a letter sent Wednesday to General Mills, the advocacy group said it found concerning levels of phthalates in several General Mills products, including, you know, organic cheesy ravioli. other General Mills products that tested positive for high levels of chemicals, including Yoplait, Cheerios, Green Giant, cream-style sweet corn. When you buy organic, last thing you expect is that you'll be eating plastic chemicals. I mean, this is like an issue in everything, and these things really do affect people, you know? And more studies are coming out on that. I think it's just a problem because some of this stuff is just so new, right, to the market, and it takes a while for people, you know, regulatory bodies. I mean, Consumer Report's not a regulatory body, but, you know, it has impact to some extent. Basically, it takes a while to discover, like, the impact these things have on humans, right? So phthalates or plasticizers, as they're also known, are chemicals that can be used to make plastic more durable and flexible. That's according to the CDC. Some studies have linked the chemicals to adverse health outcomes such as heart disease, diabetes, and obesity. Consumer Reports also launched a petition on Wednesday calling for General Mills and its subsidiary Annie's to eliminate plasticizers from their products. I mean, and what's crazy too, you know, and these are just phthalates that are in the food, but I mean, you have plastic all over you, you know. It's weird to think about, right? I mean, this shirt, I don't know this shirt, but, you know, even like my fleece or something like that is plastic. A nice blanket you come up with at home, it's all like ethyl-based stuff, which is pretty nuts. And I think probably going forward, this will be a major issue, of course, because you're adding like kind of a foreign substance into your body. And it probably doesn't know how to process that very well. It's pretty crazy. You know, General Mills is so dominant, you know, it'll be, you know, interesting to see what they'll do without actually some massive legislative push. So, anyways, kind of more interesting news as well. Bitcoin is back on top. We're back at 48,000 at least. You also had Binance. They delisted Monero, and I wonder if, you know, something like that is kind of due to this increase of attention that it's getting from the SEC. Monero, in a lot of ways, Monero is really what people think about when they think about Bitcoin, right? Like it's all private and all this kind of stuff. In a way, it is private, like away from our, you know, personal identities, right? But there's still, you know, indicators of some wallet did this activity in this amount with another wallet, right? Well, Monero completely eliminates that, and people have, especially people like in the traditional finance and regulatory bodies, have really been against that for a lot of reasons, obviously, right? Because you just can't kind of track it. So, you know, Binance delisted that, which I think is pretty fascinating. And when you have this halving that occurs in the next few months, I think Bitcoin prices are still going to increase pretty substantially. And, you know, I think we're really entering a new kind of world with this kind of stuff. I don't have really a price point for Bitcoin just because everyone does and they're all wrong. But regardless, it's interesting to take a look into. Here we go. This is what I was looking for. So Binance delisting sparks privacy concerns. This week Binance, the world's largest crypto exchange, announced it was delisting a token called Monero. It sparked controversy in some corners of the industry. Not among the crowd of asset managers. Okay, again, this is what I'm saying. Like this idea that, you know, if you're going to have crypto, you want this to be some big privacy thing. Like if you're doing it for ideological purposes, you shouldn't be going to Binance and buying these kind of things. You know, there's other ways to get these kind of tokens. It's not the end-all be-all. And really, the way that crypto will be completely accepted in the mainstream is going to be through ways that challenge the concept of cryptocurrency itself. Monero is a so-called privacy coin beloved by people who libertarians, they say, but whatever. I try to avoid that kind of stuff because they see it as the closest thing to everyday private money. I can hand you my bank account number to transfer money. Okay, I kind of explained that a little bit. Anyways, it's pretty nuts to see them get out of this. And I think it's because they want to be safe in the event of increasing regulations. So, I don't know, kind of interesting. Speaking on some more crypto news, the NBA is sued by investors over ties to Voyager. The NBA is sued for promotion of a defunct crypto exchange, Voyager Digital Holdings, which investors allege led to the loss of more than $4.2 billion. It was grossly negligent for approving a marketing deal between Voyager and the Dallas Mavericks. I think it's Mark Cuban, right? Anyways, pretty insane. Folks, stay tuned. We'll be right back.
you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Some good news to end the day. Inflation in December was even lower than first reported. The government says the price consumers pay in the marketplace rose at an even slower pace than originally reported. Updates on the Consumer Price Index show that the broad basket of goods and services measured increased 0.2% on the month. That was less than 0.3%. While the change is only modest to help confirm that inflation was moderating as 2023 ended, this gives more leeway to the Federal Reserve to start cutting interest rates later this year. The revisions are done, as a matter of course, for the BLS, but garnered extra attention this year after the market reacted sharply to last year's changes. Indications that inflation in 2022 rose more than anticipated drove Treasury yields higher and sparked worry from investors. Give me 1 second. See, what's the 10-year yield at right now? Still up at 4.17%. Anyways, keep looking a little bit more. Fed Governor Christy Waller, in particular, had called attention to the 2022 revisions, sparking market attention for latest round. Excluding food and energy, the so-called core CPI increased 0.3% for the month, the same as originally reported. Fed policymakers tend to focus more on the core measures. Also, the headline November reading was revised higher, up 0.2%, versus the initial 0.1%. Still don't think. I think it's probably good to listen to Powell with him saying that you're not going to see a rate cut before even really in March either. I think probably summer makes a little bit of sense, just, depending on what, kind of happens, obviously. But it seems like people are ready for it. Here, this is the article I wanted to talk about, too, with Yellen. The commercial real estate losses may leave banks, quote, quite stressed, which is not what you hear from the Treasury Secretary. Loss in commercial real estate may leave financial institutions quite stressed as the loans come due. Vacancy rates in some cities persist at high levels. Anyways, folks, thank you so much for joining me. I think Tom will be back Monday. I hope you all have a wonderful weekend. It's the Super Bowl. I'll be supporting the winning team. Have a great rest of your weekend, folks.